Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Tuesday, August 27th, 2013. Well, the change of trend today, and to candle it's made a lower high and a lower low. Previous day's trading we suggested there was a strong possibility of a change of trend. We had a candle that had a fairly large black body. The sellers had closed with control of the market, and the market had been strongly rejected from the Tenkan Sen. We also had a potential setup for a Japanese candlestick bearish engulfing pattern, and we had confirmation of that today with this candle that's made a lower high and a lower low, therefore changing the trend to the downside. This change of trend also continues the series of lower peaks and lower troughs in this market, and therefore not only are we in a new first time frame downtrend, but we're also in a second time frame downtrend based on peaks and troughs, and this is suggesting that this market may be destined for lower levels. In terms of today's trading, a very large black body, and a day therefore where the sellers have found a substantial amount of net downside momentum. In net terms, they've made a substantial amount of net bearish progress on the day between the open and the close. The problem here though is that when we tend to get these large days that are really very much out of whack with a lot of trading that's near it, they tend to be exhaustion days, and there's a possibility of not seeing some follow through here, and we may see some congestion. Not likely that we will see a strong retracement, although the market could trade higher, but it may not be strong, and the likelihood is either congestion or a weak retracement. In terms of the trading throughout the day, the sellers have been in control of this market for almost the entire day, but if we look at to the low of this current candle, it's traded exactly to the bottom of the cloud. And it's interesting how the Ichimoku indicators often act as areas of support or resistance, and here in the recent past the Tenkan Sen has acted as resistance. For the high today, the area around the Tenkan Sen and near the 1654 area that I suggested was very strong support, and resistance is held as resistance, and now the bottom of the cloud. So moving forward, that bottom of the cloud is crucial to maintaining any upside potential that this market may have, and if we have a bearish close down below there, very solid potential for downside. And perhaps if we do see continued bearishness, it may not take the market long to trade down to the 1600 round number level of support, and that will or has potential to hold as very strong support for this market. Now in the trading session today, the market also gapped at the open down below the previous price action, giving us a window here, and we know that windows tend to be areas of potentially strong support or resistance, and here today, with the way that this market is closed, it's actually closed down below the window that had opened from some time and closed in a bearish way, thus closing that window and suggesting that we may see some follow through to the downside. If this market does attempt to rally, there's a possibility of that area between that window holding as resistance, so let's be aware of that. But certainly if the market does rally up towards these highs again, that window there around this 1654 certainly strengthens that area. And in the immediate future, we also have the top of the cloud trading around there, so I doubt very much that this market is going to trade up through that level within the next 3 or 4 days. Now the market has also closed down below the bottom barrier of this highlighted zone that has been an important zone for quite some time, and we saw the market trading in there, attempting to rally and then closing down through there, and that's suggesting that we may have had a very strong change in sentiment in this market, suggesting that the market may be destined for lower levels, and therefore the low of the current candle and the area around the bottom of the cloud becomes even more important. Now in terms of the Fibonacci extension, we're examining the relationship of the first time frame downtrend to the previous time the market was trending down, and here we've seen the market close in a bearish manner down through the 61.8% level, and this is suggesting that the market may be destined for lower levels. So we're looking to the 78.6% at 1621 or at the 100% down at 1608 for potential support levels, and what we want to do is look at how the market reacts to those levels. But the reaction to the 30 38.2%, and the 50% and the 61.8% levels has not been good. Solid bearish activity down through all of those levels. Now, with the Fibonacci retracement, in one go the market has traded all the way through the important levels and down through the 100% level in a strongly bearish manner, suggesting that the market is destined for lower levels. So we are now in an expansive mode of that. Our next target is the 161.8% at 1620, and then if we trade in a bearish manner through there, the next target is the 261.8% around 1590, but the market would need to breach that 1600 round number level before we trade down there. In terms of patterns, no major patterns in the market at the moment. We saw this confirmation of this complex head and shoulders pattern, and the breakout. The target has been met, and has been met quite easily. The market retraced and is now selling off, so it's has been a very good sell signal and an indication of a strong major top up around this level, and the market is still trending down from that breakout and close below the neckline. Now, in terms of Ichimoku, a neutral market in big picture terms, and it has been quite some time since we've seen a neutral market or a bearish market. So the last time we had a neutral market was in early July, so for almost 2 months we've seen the market trading up above the cloud with a bullish market. There is a strong possibility of a bearish market, so we are looking for a close down below the cloud, and let's be aware that this cloud is flattening out, and when we have a breakout down below a flat part of the cloud, we can have false moves. So what we want to see is a solid bearish breakout down below and follow through. So be aware that there may be some caution if we do see a breakout below the cloud here, but technically we would have a bearish market in a long-term time frame, but at the moment we're neutral. In the medium and short-term time frames, the market is bearish by trading below the Kijun-sen and Tenkan-sen. We saw the crossover of those two indicators above the cloud giving us a weak signal. It has turned out to be a good signal. We've seen the Tenkan-sen holding as a resistance, and now both of those indicators are pointing down quite sharply, once again reflecting solid downside momentum. Very often when we have that downside momentum with this very sharp angle, the Tenkan-sen tends to be the first area that the market finds resistance, and tends to be strong resistance. So that area around 1654 is even stronger now with this confluence of potential resistance around this area. So it's highly unlikely that this market is going to change sentiment very quickly and turn into a bullish market in the long-term time frame very quickly. So potentially for tomorrow, with this solid bearish breakout down below this window, it is suggesting that the market is very strongly biased towards the sellers. We are looking for a potentially important breakout down below the cloud. Let's watch for that. If we see strong bearish early activity, it may suggest that we are seeing some follow through, and we will be looking for a potential test down to the 1600 level if we see a strong bearish close down below the bottom of the cloud.